All right, Patrick, welcome to the Nova University podcast. Would you like to introduce yourself to the people that are listening to this and the people that are on the panel right now?
Yeah, Fabian, appreciate you having me. My name is Patrick Stoy. I'm the president of MC Mortgage Group and MC Capital out of Wilmington, North Carolina. Basically, we've been doing residential finance for over 23 years. Really kind of work with investors, concentrate on that, of helping people grow wealth through real estate, all the way from residential 1, 2, 3, and 4, all the way from single family to duplex, trials, and quads on up to apartment complexes, mobile home parks, all other fun things. If it has to do with real estate and finance, well, it's good to have a conversation about it.
Yeah. And a lot of people that are listening to this, Patrick, they're very young and they always want to know, how did this person get their money? How did this person start out? Now, did you always have money in the beginning? Like, what was your beginnings like at that age?
Oh, no. Lots of credit card debt getting through college. I mean, we all got to pay our dues and, learn the pain of it. Really, it boils down to just, working harder while everybody else is playing, to be honest with you. I mean, at the end of the day, that's kind of the secret, I guess I would say. I mean, I waited tables, bartended back in my 20s after college. While I would go do the mortgage industry during the day. So basically got into trying to be a loan officer essentially for a mortgage company, would leave that and then go bartend at night. So usually takes about 3 years before you can, can make a living, I guess, good way to put it when you're in sales. So from that, just through the years, bought my first primary residence. And I'll tell you the grind. I mean, you really don't ever have any money until you get, you're always hustling for that next deal. And I guess what I mean by that is like you made a little bit here, and then it's a matter of going on to the next project and kind of getting involved in that. And, one thing that I did is I never let an opportunity pass me out without really diving into it. Does it make sense, man? I'd always rather try something always rather try something and fail at it than not try at it. So literally every opportunity that came along, whether it was a partnership or a deal or something like that, I always looked into it and always, tried to, let's go in here. Can we make this work? Can we make this work? And some of them did, some of them didn't. So at the end of the day, I mean, I wasn't born into money. Mm-hmm. It's just through hard work and grit and taking chances and just, making sure you surround yourself with the right people that are also working toward the right goals with you.
Okay. And who did you surround yourself while you were doing all that? I'm guessing, were you surrounding yourself with old people that were playing at the golf course? Or were you surrounding yourself with high schoolers that were kind of laid back, that were doing some other stuff? Like, where were you at that time?
I mean, a lot of it started from just people that were my age that I had done transactions with. One of them was a doctor, basically, and had just kind of helped him get his primary residence. We were talking, well, like, hey, let's go buy a condo together. And then so I had another buddy. So 3 of us went in and bought a condo together. And it just kind of got me into the gist of here's how a partnership works. And then from that, just kind of opened up my ears of other partnerships where I got into I got approached for a mobile home park from a gentleman to come in and be part of that. So that kind of opened up that partnership of getting into a mobile home park throughout the years. So really at the end of the day, it's being attuned, listening to the opportunities that are out there when somebody says something and just diving in on, well, what are you talking about? Does it make sense? And then using your own, your own work ethic essentially to try to, does this make sense? Does it not? What am I going to be able to commit to it to try to make it work?
Yeah. And for those that are like young and they're finding like these properties from, like, let's say their neighbor died and they're like, hey, I just got this property as a probate, but I don't have the funding to purchase this property. Right. What are some creative ways would you say to like actually fund that deal or go look out for people? I'm guessing if you were in that situation, what would you be doing?
Try to do if that came to mind with owner finance to me. I mean, that'd be the first thing right off the bat, because that makes it simple. It's just, hey, how could you owner finance it to me, or do you need the money now? And of course, that kind of leads into where it would go. As we know, every transaction is a little bit different. But it always starts off with the seller. What can I get the seller to work with? Do they need the money now? Because they need the money now, I'm not going to pay as much for it as if they didn't need the money right now. I'm willing to pay more for a property as long as I get favorable terms, because it's overall, I don't have to put less into it and my payment's going to be cheaper. If they want the money now, it's just a matter of that point of going to your friends and your family going, look, here's what I got. Everybody's generally always looking for an investment. And that's where, having, parents or friends of parents, somebody that, that everybody knows somebody that's usually in the game of real estate. And it's just, a matter of approaching like, hey, here's what I got. And it's worth it. Like, look, I'll even split it with you if you'll walk me through what I don't know right now and do it together.
Nice. Yeah. Being that creative is what gets you there. And you having this like financially free or this financial actual mindset, did that come from your parents, or where did that actually come from originally?
And it just came up from growing up poor, to be honest with you. I grew up really poor, lived in trailer parks, moved around a lot. My mom didn't own a lot of stuff. We always were just rented. And so I think the desire to, want to make sure that my generations did not have to go through what I had to go through kind of thing led me to really have a desire to make sure that I am, building something and sacrifice a lot of my personal time for myself now to make sure that I'm building something for my grandkids that great grandkids that I'll never know.
Yeah, you're definitely right about that. And you going to college, would you say that was college now it's worth it? Like, what's your opinion on that for those that are transitioning to adulthood?
For me, like I come from a military family. I'm the only person in my family that actually did not go military because I ended up getting a football scholarship. So it kind of took me a different direction. If I would not have gotten a football scholarship, I would have gone the military route. But going to college right now, like my son's 21 years old right now. And we played travel hockey for years. He went to prep school up in New Hampshire, up in New Hampton. And he came to me and we had visited UNC Charlotte. And he was honest with me. He goes, Dad, I'm not a university kid. He goes, I'm not. He looked at me and told me that. I was like, well, that'll save us a lot of time of having to go around to a bunch of different schools and talking to all the coaches and doing those kind of things. And so he, being that we had COVID, he graduated 2020 and COVID hit right there. He has now gone over to a trade school, the NASCAR Tech over there north of Charlotte, to go learn a trade on how to teach the machines to cut the metal that builds the parts for manufacturing. Yeah. So I don't, it's not that it has to be, not everybody has to have a college experience essentially, but it's just a matter of finding out what you love. That's really what it boils down to. Like, what am I willing to, give my time to that is going to, that I'm going to be able to make a benefit to society. And everybody has their own definition of what they're going to do that. Sorry, I got my dog here. Perfect. No, so it's college has its purpose. And I think a lot of it is getting into it and then understanding, what you want to learn and what you don't want to do. More importantly, it's kind of interesting that I went to college in the 90s to age myself. And it's interesting that like even high schools right now, like, oh, you got to go ahead and pick what you want to do right now. And I'm like, wait a minute, you're not supposed to know what you're wanting to do the rest of your life at this point. I can't imagine how many career changes that somebody would have, having to start off at 18, doing something, and by the time they're 25, like, well, I'm going to do this. And so it's hard to get good at anything if you are starting so early. You really have to try so many different things to figure out what you like, what you don't like. Because the biggest thing that I see people do is they'll end up going and getting their master's, their doctorate to some degree, and they get out and they absolutely hate their job.
Yeah.
And they got all this debt, and now all of a sudden they're like, you know what, I'm just going to go do landscaping. I actually want to be an outside guy, and they could have gone from day one and just started a landscaping company and done that. But, one thing that no matter what classes you're taking in college, if you're going to college, you need to take some business courses, bottom
Yeah.
just to get the foundation of that, no matter what your degree is going to be. If you're going to be, even an artist, go take a business class so you understand the business side of it, of how to make money doing what you love.
Yeah, I definitely agree with that because I understand like what you said about kids actually changing their major like midway in college and they spend so much money is because from high school they've been taught like, oh yeah, go with this one thing, it'll get you rich, right? Or they've been like groomed in this area of like, let's say computer science or something. And it's because they didn't just like, it's not that they like the subject, but they like the people that were in that subject, right? They like the people that they're surrounded with. And once they go to college, they're like, I'm not really digging it with these people here. And it just changes their whole mindset and everything. And they do actually change their major and they spent like, I don't know, 100K already. And they're like, oh, that's not what I wanted to do. And you are right where like, as an 18-year-old, you really don't know what you really want. You should just go out there and just learn as much as you can.
You're not supposed to. You're supposed to get out there and learn and figure it out and fall on your face, get back up and,
and
figure it out.
What was the biggest struggle that you had while you were actually being an investor? Like your first property, right? After that, like I think your first property was your primary, right? So
Yeah.
After that, what was the biggest struggle that you were having in that age?
Yeah, so, my very, very, very first deal was a wholesale deal, literally. A wholesale mobile home, actually, a wholesale mobile home. Took that money and used for the down payment on my first primary residence. About a year and a half, 2 years later, basically I was ready to move up to the next house. And so I turned that property into a Section 8 house because I was scared. I was like, all right, I'm going to have 2 mortgages here, so I had been living in as my primaries, regular 3-bedroom, 2-bath. At that time, I was able to buy it for $100,000. Where by the time I moved out of it, I think the property value had probably gone up to 120, after 2 years. I mean, it was just a nice appreciation. So I put a home equity line of credit on it before I moved out of it. So at least I had access to some of the equity in it. Moved into a new primary residence, did the Section 8 house, kind of just understanding how that works because I wanted a guarantee check. I was scared to be a landlord at that point. And then from that, understanding what it's like to deal with a tenant, the stories that come and those kind of things. So I just kept that as a rental for a couple of years, started to just understand a little bit more in real estate, understand what contract for deeds means, to where basically you overtake somebody's mortgage because they don't want to deal with it anymore. And somebody had an investment property, they didn't want to deal with it anymore. So we ended up working out to where they essentially owner financed it through a contract for deed because they had a mortgage on it. And of course, I couldn't go get a mortgage for it. So, but we worked it out to where I overtook the payments, basically was responsible for the taxes, insurance, maintenance, all those kind of things. And just worked a couple deals like that. And it just through the years, just had different properties on the strategy. I mean, you got to figure out when you're buying a piece of real estate, is this a legacy property or am I just using this for another purpose right now? And what I mean by that is there's 2 reasons you buy real estate. One of them is for cash flow or one of them is because you want to own it forever. That's it. And the way you got to look at it is like I had bought a condo up in Raleigh, up near NC State, to where I just knew that I wanted to have it as a cash flow property. So what I did is I put an interest-only home equity line on it. And basically from that property, I was able to kick off enough cash every month that covered the payment for my property that I went to a partnership for the condo at the beach with the 2 other guys. So It was kind of using the cash flow of this property to cover the payment on this one. So I actually wasn't having my hard-earned dollars wasn't having to be used. I just was able to use the cash flow from here to beat down the principal on a legacy property. But you got to go into it knowing what is the purpose of this property because every deal is a little bit different.
Yeah. And do you believe that people need to niche down on one thing, or do you believe, hey, if this strategy works, just go for it? Because it seems like you're kind of doing like a lot of things. You're doing Section 8. You're also doing what is it? Multifamily. You're also doing like a bunch of other stuff. Yeah. What is your perspective on that?
We got to try it all, honestly. I mean, you really, the good part about it is an adventure. You got to try a little bit of this, you got to try a little bit of that. And I've worked myself from doing the wholesale to being, a single family landlord, to being a multi-unit duplex landlord, to, now I've got a 52-unit mobile home park that started off as a partnership that I've had to go through the years of putting infrastructure in and, building out the mobile home park to where I've been able to buy out my partners at this point. And that property will be owned free and clear, in 11 years, because my goal is to be at that point to be where I have an option to work. Not that we're going to quit working, but it's just always having a couple different verticals of what you're working on. And that could just be from partnering up with people. I mean, here's the thing: if you've got the time and the energy, there's always somebody with money out there that wants to put it to work if you're willing to put that in. And vice versa, if you've got the money to put out, if you've got the money sitting there, you don't want it to be lazy. You just got to find the right people that want to put in the work and learn. So there's always opportunity. It's just asking around and find the right people that aren't trying to take advantage of you, but are good working people.
Yeah. And have you also faced shiny object syndrome, where there was like, at the time you were doing real estate, where there's anything like stocks, crypto, or whatever just popped up in front of your face, like, oh, I gotta go with that. Have you tried those routes as well? Or you're like, no, I just stick to one thing. My niche is real estate.
You gotta try it all, man. You have to. That's the adventure. So I mean, I took options trading classes, so I would try to do mortgages and trade options at the same time. That did not work well. But the good part is it gave me enough knowledge of studying it, of like candlestick theory and understanding Bollinger Bands and just the MACDs and like knowledge. At the end of the day, it's just how much knowledge can we pick up to figure out what we like and what we don't like. I mean, with me for trading options, it's a very lonely, I guess, way of looking at it, because you're literally getting up in front of your computer and you're seeing what's going on in every single market all the way around the world all the time. And it can be a very just, unsocial is the way I felt about it, because I literally was just looking at my computer all the time, trying to make sure that I was timing and, didn't want to take a big loss or anything like that. So I learned, for me, that trading options was not what I wanted to do. I wanted to be around people and help people and talk to people. So, just pulled me back over to helping people acquire properties and real estate. And, those are what really, was good for me compared to trying other things.
Yeah. And did you ever feel burnt out while you're doing like everything at that moment? And like, did anything else scare you while you were doing all this? You're like, you know what? I can't. I don't know how people are doing it. It's just too much. Have you ever had that point of in your career?
Well, it's, you always got to be careful of your bandwidth. I mean, I'm a pretty active person. I don't need a lot of sleep, and I like to have a lot of things going on. I guess a good way of putting it. So, having a bunch of different projects going on is always good, because it gives it to where, and when I say projects, I mean, being involved in partnerships, being an angel investor, where we invest in startup companies and stuff like that, things that allow you to get out of your comfort zone, because it's all about getting uncomfortable and learning something new all the time. And yeah, I mean, just like anybody else, I mean, when you work hard for a long time, and I think the original question was going back. I mean, I worked in my 20s while everybody else was out partying and going on things. I mean, I grinded. I mean, I'd work long days, just, getting better at my craft, essentially. Because what you do in your 20s leads to what you do in your 30s, and what you do in your 30s puts you where you need to be in your 40s. So it's working smart and working on something that people need. And so people need housing. And so that's why, if I looked at it, it's kind of like, do I want to go sell? At first I was going to be a real estate agent. And then I got around the guys that I used to work in the restaurant. They knew I was good with numbers. And they said, just come here and look what we're doing. And I fell in love with the numbers perspective of it. So, but it was a matter of, do you go sell cars? Do you sell boats? Do you sell houses? Like trying to figure out what's in demand. And then from that, it's a matter of, right, what has a big ticket item on it? And so because the bigger ticket item, the more revenue you can make based off of the volume that you're doing,
Yeah.
and for the how many families you're helping. So that's kind of the way that I decided, like housing, because it's the biggest investment in people's lives, and if we can show them how to do it the correct way and the right way, that it won't put their families in jeopardy and can lead to changing their downline based off of doing the right things with their house.
Nice. And for your partnerships, while you were doing it, how do you know this is like the right partner? This is someone I can trust with my money and we can actually 10x each other. Is there any like advice you can give for those that are looking for partnerships? What they need to watch out for?
Yeah. Well, you gotta watch out for everybody, right?
Yeah.
The money's involved. So I mean, at the end of the day, it's all about the project. I mean, the good part about partnerships, you're gonna have an attorney draw up your LLC docs. The LLC there is, to protect the partners from each other, and you also want to make sure you have your accountant involved. I'll tell you that the biggest thing that you can do is develop a relationship with a CPA that's going to be with you, or the bookkeeper of the CPA that's going to be with you through your career. That's the number one thing, because I've got mine that I've had the same accountant, but the bookkeeper is the one that I have interaction with all the time, and that's probably the most important person in my dealings, because no matter what business that I'm in and out of, or creating or doing, they're watching the numbers. We're having those conversations. Does this make sense? Does this not make sense? And any of my partnerships, they have to go through my accountant. That's just the way I do it. I don't use anybody else's account. I know that mine's looking out for the health of the company, plus also making sure that nobody's doing anything that doesn't need to be done.
Nice. And for like starting up, right? Would you get a partner that is kind of like the opposite of you, or like they have a certain strength in one thing, or would you try to get like-minded people and try to aim at one thing? Because there's a lot of like 18-year-olds or 20-year-olds or 26-year-olds, even 30-year-olds actually, that are like, hey, let's join together, right? You have money, I have money. How about we go 50-50 on this flip, right? But they're like both getting started. Is that the right way to go about things?
You need to go find and this is just the way that I look at it. I mean, if you've got the money, you just need to find somebody, the partner that can do the work. You see what I'm saying? Yeah. So if you've got money and they've got money, what's kind of the point of that?
That is true.
Yeah. So I always try to find, somebody that's smarter than me. I guess good way of putting it, because they're going to have different kinds of knowledge, and it's really interesting. And I kind of learned this a little bit younger, is that the best partners to find are people that are kind of, I guess, mentors and partners. I guess what I'm putting it, somebody that is just recently retired and wants to kind of get back into the workforce. And people retire at different ages. I've met people that's retired at 50, and by the time they're 52 and 53, they're like, I need to be doing something again.
Yeah.
We all have that goal of retire by 40, retire by 50, those things, but we've got to be doing something. So I've been able to find partnerships where the people are older than me, and they had the time to dedicate to the project a lot more than I could. So that was a good relationship, because I could handle all the finance side of getting books taken care of and those kind of things, while they could go out there and handle meeting the contractors, doing those kind of things. Because I've done a lot of partnerships with people, because I've gone through of doing flips myself. Do I like them? Do I not? To just partnering up with people, to where went through all those, what worked, what didn't, where at this point I just kind of fund people more than anything. Let them create, have them create their LLC. We'll lend their LLC the money, essentially, so they can go do a fix and flip. I mean, we'll help them through it from the perspective of, getting a subject to appraisal, making sure you're not overpaying for the project, those kind of things, and then having draws for the as they move along the project. So it's just there's a lot of people that are always willing to help people that are trying to help themselves.
Yeah. And you spoke about mentorship earlier. And is there a way someone can go about finding the right mentor instead of like the wrong one? Or what is a good mentor in your perspective? And did you have a mentor while you were doing all this, by the way?
I've had, you always got to have people you talk to.
Yeah.
I mean, there's always a nugget. You can't go. So I've always had people that, I just that I talk to. There's not really a one person that's like, oh, here's what you've got to do. I mean, a lot of it you have to learn yourself. I mean, that's the best way of being successful is trusting your own gut, learning it either through pain, because man, that sucked. I don't want to do that again.
Yeah.
And failing or losing money or something along those lines. So I mean, just at the end of the day, I'm probably more self-educated than somebody showing me a path, but I'm always reading. I mean, that's the best part. I mean, I was a big reader. We didn't have as much exposure to the internet as you can look anything up now.
Yeah.
And I still like to read my books, but just the knowledge. I mean, it's just always learning, but you got to, it's not just the learning, it's taking the chance. I mean, that's the thing. I think people can over educate themselves, but never jump off the cliff to go get wet. So you gotta, outside of reading, you gotta go try it. I mean, worst
Yeah.
case scenario, you're gonna fail and you get back up and you start again.
Yeah. You got to get wet. I like that.
Right.
And for your like, can you explain what you do as a lender, right? What type of lending do you actually do?
I'm a true independent mortgage broker. MC Mortgage Group. We're out of Wilmington, North Carolina. Have an office in Raleigh. Do business in North Carolina, South Carolina, and Florida as of right now. So basically, what I do is when somebody wants to get pre-approved, they'll basically a real estate agent will put us together, or a customer will reach out from a referral source. And basically, we'll talk about what is your budget? What are you used to paying for rent right now? Because if you're used to paying $1,500 a month, well, what does that look like if you were able to buy a property and still have around that $1,500 payment? What does that look like? And depending on the person, I mean, they could have, whether if they've served in the military, they may have their VA eligibility. We've got, depending on your income level, we have a 100% program called USDA. Which is a great program. A lot of people, it's U.S. Department of Agriculture, but it's not like you have to go live out in the sticks. I mean, it's literally just right outside of the some of the city locations, and it's based off of property location and household income. That's a great program. Then we've got FHA programs that have down payment assistance that can still get you in at 100%. So really what we're trying to do is figure out from a budget perspective, what are you paying in rent? What does that look like from a price range? If you were to take that same $1,500, could you go buy a $250,000 house?
Yeah.
And here's the 100% options, and here's what it looks like. Or do you have some down payment money that you could get from somebody, and then we could go regular conventional, and property location, household income, none of those things don't matter.
Nice.
So it's just educating of what you can do, because right now, I mean, you're either putting money in your pocket or you're putting it in somebody else's. And if you're renting, you're just putting it in somebody else's. So it's how do we do that shift? And of course, the younger you can start, the better. Period. Because right now, if you're young and usually in your 20s, you don't have the obligations with life yet. And if you're the one that goes buys the house, you can rent out all your rooms to your roommate and house hack it, essentially. And so that's a good way of going at it. And we allow what's called non-occupying co-borrowers. So if somebody's parent or family relative wanted to co-sign on it, essentially to invest with them on the house, maybe they provide the down payment, get you in there, and you're handling the maintenance of it and collecting for the roommates and stuff. That's always a good way to do your first investment, is either do it by yourself or have a family member invest with you by signing on the loan also to maybe provide the down payment.
Nice. I like that. That is one thing that a lot of people do forget about co-signing and everything. And another thing is for investors, right? What have you seen wrong whenever they try to utilize someone like yourself, like a lender? What are some wrong things that they do that you think that they should know now?
Reserves. A lot of people, and I fell in this trap too of trying to be equity rich but cash poor, because we all, as you start building your real estate portfolio, you keep wanting to, every single dime you get putting into down payment, trying to acquire more properties. but you have to remember at the end of the day, there are going to be times when people can't pay, and you're going to have to cover that payment until you can get collected from them. And so it's very important to make sure that you've got 6 months of your own survival number. Basically, what I mean by that is, your car payment, your housing expense, your how much it costs you to pay off your credit cards every month. Kind of have 6 months of that money put into a savings account to the side, and then from that you want to invest in real estate. And I'm a big advocate of having as many wheels on the bus working for you. So I mean, also, I believe in investing in the stock market for the long run, and there's some strategies with that to make sure you don't lose that money. Needless to say, everybody always chases the S&P index. So why not just buy the S&P as a majority of your portfolio to have your safe money for the rest of your life? Again, not giving financial advice here. I'm just saying little things that I do that I wish somebody would have told me 20 years ago that I've learned throughout the years outside of real estate. Is you've got to be balanced in your stock portfolio too, to have that grow along with it, because that's really the difference between being rich and being wealthy.
Yeah. And I get this question a lot. Someone would be usually in their 3rd or 4th loan, and they're facing their debt to income ratio is like really high. How can they actually get the max, like Freddie Mae and Fannie Mac loans that we can get is 10, correct? So how can they reach there without with actually lowering their DTI? Would the whole getting a parent or getting some family member to co-sign with them, would that help out that DTI ratio at all? Or what are some solutions?
So here's the way it works. It's actually relatively easy. So let's just say that you bought a property, you lived in it for a year or two. Your payment on it is $1,500. You really need to understand, what could I rent this out for? So let's just take the example that you had total principal, interest, taxes, insurance, HOA payment of $1,500 a month. If you were to want to move up to the next house, you could provide us with a $2,000 lease. If somebody's willing to rent your property for $2,000, we give it a 25% haircut, which would make that $1,500 go away. Okay. So the key there is that whatever amount of the lease that you provide us with, we give it a 25% haircut.
Yeah.
And then that is actually used to offset the current debt for the property that you're going to be renting it out once you move out of it and buy the new house. So what we'll do is we'll get people pre-approved. Let's say you bought your house now. Let's just say you bought a house this year. We're a year down the road, because when you go to sign the paperwork of buying a primary residence, you're signing that your intentions are to live there for the next 12 months. So if you're young in your 20s, my recommendation is, look, you're going to move every single year right now until you can, because of family life or something like that changes. So you basically want to go in and buy the house, live there for basically 10, 11 months, start looking for the next property, knowing that you can get a lease. That's the key, is what is the market rent going to be that will offset the majority of that debt. Because now, as long as your DTI is going to be helped because of that future rent that's going to come in, that you're going to provide us with a lease prior to buying the new property, because they're going to move in after you move out. But you can just keep doing that every single year. And of course, after you have it on your tax returns, will be defaulting to your tax returns. Okay. But if you're leaving a departing residence, we just need a copy of a lease and we'll offset that debt.
Nice. And would also a co-signer help with that debt as well at all?
Well, what you're doing with the co-signer is really just bringing in the income. Because here's the thing about it. If they want to give you a gift for the down payment, that's fine. It's just a gift. The reason that you would be bringing them in would be that they're either wanting to, they have more income than what they're bringing in, income that's greater than what your liabilities are and their liabilities are, that help the situation essentially. So let's just say that, you are going to college right now and you're not, you're in school all the time. So you really don't have time to have a full-time job, but you've got, mom or dad or uncle or sister or brother that wants to help you out. Their income, as long as it's enough to support their debts and can help afford this, they can be the non-occupying co-borrower and essentially help you acquire the house without you having a full-time job or supporting it on your own. Okay,
nice. And what's the biggest fear decision that you made that came out with the biggest outcome?
The biggest fear? I had to go borrow some private capital money. I had a bank call my note during 2010. I'd never missed a payment on it ever.
Yeah.
And the bank was being acquired by another one. And they basically said that I need to give $1 million. And I'm like, well, I can't write you a check for $1 million. So at that point, I started, just talking to everybody I knew, like, hey, here's what I'm up against. Who you recommend I talk to? And that was just learning, like, how does it work? And ended up having to go borrow some. It was my first experience with true hard money. That opened up my eyes of how that world works. So we had to go in and buy the note at a discount, and I had to pay 17% interest only, $100,000 kicker. I mean, it was expensive, but it was a lesson. Every little pain that you go through. And so through that experience, after I was able to get to the mobile home park, got it stabilized, and got all that taken care of, that's what led me to open up my MC Capital side. I like to call my capital friendly capital, because true hard money I've gone through and it hurts. But that was the biggest point. I mean, I literally was at, man, do I just let this mobile home park go back? We had just got done putting water and sewer connections in. There was no homes on it. There was no cash flow on it, but had made all my payments on time. And the bank just said they didn't want it anymore. So that was one of my pain points that through it all ended up turning it around, have that mobile home park. I've already bought up my partners on it, and it allowed my brain to figure out I should create a business that does this also, but in my opinion, doesn't take advantage as much as I was taking advantage of.
Yeah, man, that's nice. That's like, well, that would have scared me as well. That's a good one. You're actually that's a good answer right there. And what are some indicators that someone is progressing towards success in a way?
Yeah, I mean, I actually do a monthly budget every single month. I've done it for 25 years. Is literally just sitting down every single month. How much money did I bring in? How much money did I spend? And understanding and making sure that I'm at least saving 20% of my net income every single month. And that's money that you put away and you never touch again. You literally give that to the financial planner. You put it away. You never touch it, because that money's got to be there to take care of you later. So at the end of the day, it's literally just going and looking at it. There's Excel spreadsheets and stuff, but the good part is, kind of looking at what your net worth is and your cash net worth is, and going back and looking once a year, where was I at last year? Because, we're always fighting, we're always spending money, we're always losing money, we're always making money, but it's always going back and looking, am I better off than what I was last year? And as long as your net worth and your cash net worth are greater on both of those, it's always that nice progression that you're moving ahead, you're moving ahead, you're moving ahead, you're moving ahead. Whenever you feel down about yourself, go back and just like, all right, where was I at 2 years ago? Where was I at 3 years ago? Where was I at 4 years ago? Where am I now?
Yeah, man, that's good. And for someone that is that's starting out in the entrepreneur world, what is like one piece of advice you would give them for starting out?
You're doing what you love, man. I mean, that's really what it boils down to. If you're gonna sacrifice your time, because being an entrepreneur, I mean, it's a disease.
It is.
It literally is. It's a disease, and it's such a good and a bad thing, I guess, a good way of putting it. You got to remember, at the end of the day, I mean, what you're building is what you love. But you also got to remember your work-life balance at some point. I mean, while you're young, you can work. But just remember, when you start that family, you got to give the same amount to the family time that you do to the work time. That's always super hard. But at the end of the day, it's just find out what you love and try everything. That's it. Try everything. Because it's, one thing that I had read or something was, if do I want to live somebody else's dream, or do I want to live my own?
Yeah.
And if I'm going to put the time and energy into it, I want it to be my dream, what I'm working for, not somebody else's.
I love that, because everybody's working for someone else's business, but they're never working for themselves.
Right. Yep. So if I'm going to put that much time and energy into it, or any time and energy into it, I need to make sure that I'm building something that I believe in.
Yeah. And unlike other investors, what do you think your superpower is? What makes you different from any other investor or any other entrepreneur?
My superpowers, I've been through just a lot of hard things, I guess. And I just, I don't know if I call it a superpower, but I trust my gut, and whatever that decision is, I live with it, whether it's right or it's wrong, and I just don't worry about it. So
I like that. You got some sort of like spider senses going on where you're like, oh, I got to go with this.
Well, I mean, here's the thing. You just got to try everything. You literally do. And then you'll figure out what, it just makes you wiser. And I mean, as I get older, it's always like people like, oh, that's that. You don't listen to other people like, oh, that's a dumb idea, or this isn't, that's not going to work, or why are you doing that with them? I mean, as long as you trust your own gut, whether it works or it doesn't, at least it was my decision.
Yeah. At least you're the one that put yourself in the fire. You're like, oh, at least I made that decision, and you'd be happy with it. I like that way. I like that way. And if you were to like, let's say everything was gone, right? I took like some force took everything from you, right? And you got to start everything from scratch. What would you do differently?
You know what? The biggest thing I could lose, my grandfather told me this. Good, just hardworking farm guy, he was superintendent of construction company. He told me at a very young age, he goes, Patrick, you can lose everything in the world except your word. And I can tell you that if I lost everything right now, because no matter if I tell somebody that I'm going to do something, even if it goes sideways and it costs me money, I'm still going to do it because that's my word. And I think that the biggest thing in business is that as long as people can trust what you say, you can always get out of any situation because they know that you're being transparent. You're not trying to do anything shady. And so that's really at the end of the day is just your word. If you say something and you commit to it and it doesn't work out the way that you thought it was, you still need to deliver on what you said, because that one deal is not worth the reputation for the rest of your life. Just go ahead and suck it up and write the check if you have to and be done with it.
Yeah. I mean, I agree with that 100%. And you said your dad came up with that quote?
Well, my grandfather, grandfather.
Yeah.
And that's just one thing he told me was just, they can take everything away from you except your word. You're the only person that can take that away from you.
Yeah, I 100% agree with that. And what were you scared of at the time? Like in your entrepreneur phase, like in the middle of it, like what was the main thing you were like, was it yourself or was it some other people? Was it your business? What were you actually scared of?
Well, you can be the best at what you are doing, but you can't control the outside forces to an extent. Just an example right now in the mortgage industry. I mean, I can be as great as I want to be, but if there's no demand, I've got to go work harder to find it.
Yeah.
And that's where it's just a matter of just get really, really, really good, be excellent at your craft, go slow to go fast, those kind of things. And just be prepared for the headwinds, because you're always coming into a storm, you're in the storm, you're coming out of the storm. I mean, it's not blue skies forever. There's always going to be something that's coming, and you just got to make sure that you've got to put those reserves away. That's one thing that I see a lot. And even for myself, I mean, I wish I would have learned sooner to have more cash, because I always was invested in real estate without building up that other cash. And I try to help educate people who are getting started now that is just as important. Make sure you're maxing out your 401k if you have option to that. Those things, in case something does happen over here, that you still got this other vehicle working for you. I always call it as many wheels on the bus working for you as possible.
And what's a good way of like indicating how much reserve someone needs per property or how much they need in general?
Well, I mean, for just somebody that owns their primary residence, let's just say you want to have anywhere from 3 to 6 months worth of reserves, essentially. So if it costs you, $3,000 a month, you want to have, around $18,000, put away in an account that you don't touch, that can get you through that if you get laid off or there's a medical thing that comes up, that you've at least got 6 months worth of survival money put to the side in a bank that you literally don't, like literally put in a bank that you don't even have a debit card to, that you, if you ever touch that money, you gotta have to go there and go get it.
Yeah.
So really that's the first piece. And then really from once you start acquiring properties, it's the same rule. You got to look at it as that is a business, and I need to have 3 to 6 months worth of reserves put to the side for that particular property. And as you continue to grow and grow and grow, you build up your reserves, you have your reserves. And then, you know, as your property is appreciated, it's a time thing. I mean, like I said, I bought my first house. It cost $100,000. You know, that was 20 years ago. You know, that same house right now is probably, you know, $300,000 or more. And in 20 more years, it's probably worth $500,000 or $600,000 or $700,000. It's just what it is. And I would tell you that as you know, pick up the properties, they will appreciate over time. You know, they just, it's just a natural law. It's just natural that things will be more expensive than what they are today. So
that is true at all. And what action do you think someone can take that can pay big dividends for their future?
Start early. I mean, that's it. Literally, just literally
Start
buy
early.
the first house as soon as you can, and then get the second one, and then get the third one. And then when you get good at what you're doing, you will figure out of what gives you. You'll end up breaking down on what your hourly rate of earning is at some point. Like I got to a point, I had a lot of rental properties myself, and I had to sit down because I was making, you know, $200 or $300 a month off of this rental property, but I could focus my time on helping somebody get into a house. So I got rid of a lot of the distractions. I figured out what are my legacy properties, got rid of the ones that were just not there, and then figured out what my craft was better off doing. But, you know, it took me into my 40s to have that problem. So starting off in your 20s, just acquire, work hard, save the money, you know, don't splurge. I know everybody, you know, wants to have the nice cars and do those things, but I'll tell you, the wealthiest people that I have met, the people that own the most real estate, I always showed up in beater cars and had their toolboxes in their trunks, and just, you know, really was you would never know it, but it's just really, just realize that whatever you go splurge on, and there's nothing wrong with rewarding yourself every once in a while with a nice watch or something like this, but just be aware that that's money that you now don't have for an investment that can actually appreciate for you. That's a depreciating asset.
Yeah. That's a good way of pointing it out. And now we can move on to the ending questions here, Patrick. So if you can go back in time and tell your younger self something, what would it be?
Same thing. Start earlier. No, I mean, here's the thing about it. It's interesting as I look and see, you got to figure out what ballpark you want to play in.
Yeah.
What I mean by that is, do you want to play in single family? Do you want to play in multifamily? Do you want to play in, do you want to pay in big commercial? And I would tell you that it really, for me, it was just because I came from nothing. It was good to just start off with single families and, you know, those kind of things, where some other people that I know that just went straight into apartment complexes, and that's what they got really good at. And they are now able to do multiple apartment complexes. So it's just figuring out which ballpark you want to play in, and don't be scared of it. I mean, that's the thing. If it doesn't work out, then you go find another ballpark to go play.
Yeah. And when you had kids, did your fear change at all? Like now you got to worry about someone else over like a lot of people are like, yeah, I could do that to myself. But whenever there's someone else that's involved, whether it's your wife, kids, you're like, shit, now I have some people to take care of now. Were you still, your mindset change?
Yeah, well, I'll tell you, I mean, as of just not myself, but even having employees that I've seen go through that, like, oh, they're single, and all of a sudden they got a baby on the way, you know, it makes them grow up. You know, it does, like, oh shit, now I'm responsible for another human being. Yeah. I actually have to be serious and not worry about just working and going out and partying at night, you know, doing those kind of things. And then for me, I mean, it was the same thing. I mean, when you become responsible because you for another being, you know, if something clicks, I mean, you can't explain it. But at the end of the day, it will, but, you know, just you've got the opportunity to take risk and chances right now while you don't have that obligation. So go swing for, go swing for the big deals, try to put them together. If you don't have the money, say, look, I'm willing to do the work. Or if you do have the money, go try to find the people that are willing to do the work that don't have the money. And that's your team. I mean, those are the people that want to have relationships for 10, 15, 20 years.
Yeah. And what question would you like to ask your future self?
Did I make all the right choices? You know what? At the end of the day, it all boils down to, as long as I know that I can rest my head on my pillow, knowing that I haven't hurt anybody or taken advantage of anybody or anything like that. It's just, did you live a good life, and did you live a right life? At the end of the day, did you help as many people as you possibly could? Did you put people in better situations? Those kind of things. At the end of the day, that's what matters. It's not how much money we have in our checking account, but it's how many families did we leave in a better place than where we found them.
Yeah, that's true. And what do you think the secret sauce is into becoming very successful?
Creating your own luck.
Say it again.
Creating your own luck.
Creating your own luck.
Creating your own luck. And the only way you can do that is just work smart, work hard, just do the right thing. Don't, and I solely believe in this, just, you put a deal together, it has to work for everybody. That's it, because karma will get you. And I just think that is really the one thing that, as long as everybody wins, then it just helps it's good for your psyche. You didn't take advantage of anybody. They're going to tell people that you took care of them. And that just really helps your network grow, because they know that you're a good person to do business with.
Nice. And is there a quote that you live by?
Quote that I live by. Right now, I would say that the quote, because it always changes, is probably the go slow to go fast. Because as entrepreneurs, we like to make quick decisions right here and right now, and
yes,
and go at it. But for me, it's go slow to go fast, because I don't want to have to touch it twice. I don't have to work on it twice. Nice.
And is there any books that you would recommend for certain situations or parts of your life that helped you out a lot?
Yeah, there's the very first book that I read was called The Wealthy Barber. Many years ago. Whatever, I just remember the name of it. It's that's the first book that I ever read. Of course, Rich Dad Poor Dad went into that one. Some recent ones that I've read is Pound the Stone, Work in the Dark. That's a good one. There's The Hard Hat. You've read.
That's a good one. Yeah, I read that one.
Yeah. And right now I'm working on trying to read some more leadership books. So those are kind of what I've working toward. There's one that anybody that's going to get into sales, I recommend you read Fanatical Prospecting.
Fanatical
Prospecting. I've gone from reading a lot, just now I have Audible, so I'm starting to listen to them. But that's a really good book for anybody that wants to get into sales, because it'll tell you literally in the first couple chapters, do I want to get into sales or do I not want to?
I like that. I never heard of that book. I'm gonna get that one as well. And is there anything like you want to tell your children if they're at your age right now? Listen to this back.
That I hope you're doing what you love. It's really what it boils down to. I hope you're being a benefit to society, and I hope that you're helping people leave a good legacy for what they're doing and how you can help them.
Nice. And how can people reach out to you, and what value can they give back to you?
Yeah, basically you can reach me at you can Google Patrick Stoy, MC Mortgage Group. Generally will come up. My phone number is 910-200-8859. Or you can email me at pstoy@mcmortgagegroup.com. And really what the value that we can go back around is just, let's have a conversation. Tell me what you're trying to accomplish. I've probably been through it. And what is your game plan, and what do you want to put together? I mean, that's really, at this point, that's what I'm trying to do, is give knowledge to people that want to do this and invest in real estate and learn how to be wealthy, not just rich, and just share the knowledge. I mean, I've been fortunate to have learned it, or gone through it, or been given to me, and I really try to just get it out there to help influence as many people's lives as possible.
Nice, nice. Love that. And again, thank you, Patrick, for coming on board onto this podcast.
Yeah, no problem. Thank you for having me. Appreciate it.